Hello students, this is Mrs. Jennifer Cruz from Lilavati, Lalji, Dayal, College of Commerce. And in today's class, students, we are going to study economics, chapter number 9, money and capital market in India. So before starting with this interesting chapter, students, let me tell you all that the total weightage of this chapter is 11 marks with option and 8 marks without option. So let's begin with this interesting chapter. So let us first understand, students, the meaning of financial market. Okay. So financial market, students, refers to a market where sale and purchase of financial assets such as bond, stock, derivatives, government securities, foreign currency, etc. is undertaken. Okay. So financial markets, they operate through banks, non-banking financial institution, brokers, mutual fund, discount houses, etc. So financial market, students, are classified under two heads: money market and capital market. Let us study the first type of market, that is money market. Okay, so money market is a market, okay, for lending and borrowing short-term funds. Okay, it is also termed, okay, as a near money market. Okay, so it is a market for new money, we say so. That is short-term instruments such as trade bills, government security, promissory notes, etc. are traded. So such instruments which are highly liquid, less risky, easily marketable, okay, with a maturity period of 1 year or less than 1 year, comes under money market. So to cut it down into simple words, it is a market for lending and borrowing short-term funds. Okay. Now, we have two sectors, okay? We have the organized sector and the unorganized sector. So, in the organized sector, organized market, we have the RBI, commercial banks, cooperative banks, development financial institution, discount and finance house of India. Whereas in unorganized sector, we have indigenous bankers, money lenders, and unregulated non-bank financial intermediaries. Now, under the organized sector, students, the first one is RBI, Reserve Bank of India. Okay, so every country in the world has its central bank, which is called as the apex of the banking system. Okay, so it is entrusted with the responsibility of regulating the money market in the country. So Reserve Bank of India, students, is the central bank of our country. So basically this Reserve Bank of India, okay, it was, called as the Apex Bank, the central bank of the country. So basically, students, RBI, okay, it was set up on the basis of the recommendations of the Youth and Young Commission. Okay, so here in the RBI Act of 1934 provides statutory basis of the functions of the bank. So RBI commenced its operations on 1st of April 1935 as a private shareholders bank. Okay, so this RBI was nationalized on 1st January 1949. And it is the most important constituent of the money market. Okay, so certain concepts from your students can be asked as a fill in the blanks question. Okay, for example, the RBI was nationalized on dash, so 1st January 1945, 49. Next one, students, let's come to the definition. Dr. M.H. Dino, okay, says central bank is the one which constitutes the apex of the monetary and banking structure of the country. And according to Professor W.A. Shaw, central bank is the bank which controls credit. Okay, so both of them have given a definition for the central bank, that is the RBI. Let us now study the functions of RBI, first important answer of this chapter. So first one is issue of currency note. So RBI student is, it issues currency notes of various denominations. Second, banker to the government. Okay, so RBI students, it acts as a banker, as an agent, as an advisor to the government. It transacts all the business, okay, of both the central government and the state government. It accepts money, makes payment on behalf of the government. Third one is the banker's bank. Okay, so all the scheduled bank students are compulsorily required to maintain a minimum amount of cash, okay, reserves with the RBI. Okay, so here hence it is called as the banker's bank. Next one is custodian of foreign exchange reserve. Okay, so RBI students, it acts as a custodians of the country's foreign exchange reserve. It undertakes, okay, buying and selling of the currency of all the members of the IMF, International Monetary Fund. Next, you have the controller of credit. So RBI students has the power to influence the volume of credit created by the commercial bank. Hence, it is termed as the controller of credit. Next one, students, is collection and publication of data. So Reserve Bank of India students, it collects, compiles, okay, the statistical information that is required for banking and financial sectors. Next one, promotional and development functions. So here students, RBI performs various promotional and development functions, okay, like extending the bank services, okay, providing security to the urban and the rural areas in the terms of banking, okay, giving, taking up development projects for agricultural credit, industrial credit, and so on. Next one, students, other functions. Okay, so herein RBI students is known as a lender of the last resort because it also provides liquidity to the banks experiencing financial difficulty. Hence, it is termed as the lender of the last resort. Okay, so with this, students, we've completed the functions of RBI. Let's have a quick recap on the functions. First functions, issue of currency note. Second, banker to the government. Third, banker's bank. Fourth, custodian of foreign exchange reserve. Fifth, controller of credit. Sixth, collection and publication of data. Seventh, promotional and development functions. And the last one is other functions. Let's move on to the next topic, that is commercial banks. Okay, so what is commercial bank, student? Commercial bank acts as an intermediary in the country's financial system to bring the savers and the investors together. Okay, so basically the lender and the borrower, they both can come together in the commercial banking. Herein, okay, they are profit-seeking financial institution and they play a very important role in mobilizing savings and allocating them to various sectors of the economy. Okay, now let us see some of the functions of the commercial bank, students. So first one is acceptance of deposits. Okay, so deposits continue again to be the main source of funds for the commercial bank. So this function, okay, is the main function. Accepting deposit is the main function of the commercial bank. Next one is providing loans and advances. Okay, so here in students, commercial bank, what does it? It mobilizes saving and then lend its funds to the institution who are in need of that. Okay, so it provides loans and advances to the borrowers. Third one is ancillary functions. Here in students, ancillary functions include other services like transfer of funds, collection of money, merchant banking, safe deposit lockers. All these functions are also performed by the commercial bank. Last one is credit creation. Okay, so here in student, credit creation again becomes one of the most important function of the commercial bank. Okay, they are the creators of credit, we can say. So herein they create the facility of credit. Okay, they are the credit creators. So four functions of the commercial bank, students. First one is acceptance of deposit. Next one is providing loans and advances. Third one is ancillary functions, and fourth one is credit creation. Let's move on to the next slide that talks about role of money market in India. Okay, so what is the role of money market in India is what we will study in this answer. So the first role of money market, students, it provides short-term requirement of borrowers. So here in students, money market, okay, it provides reasonable access for meeting the short-term requirements of the borrowers. Next, we have liquidity management. So money market, students, here it facilitates a better management of liquidity and money in the economy. Okay, it can convert your cash cash into, all your assets, all your financial assets into cash very quickly. Next one is portfolio management. So money market students, it deals with different types of financial instruments. Okay, herein this enables the investor to hold a portfolio of different financial assets, which in turn helps in minimizing the risk and maximizing the return. Next one is equilibrating mechanism. Okay, so your through proper allocation of resources, to proper mobilization of saving, this money market helps to establish equilibrium between demand and supply. Next one is students, financial requirement of the government. So money market students, it helps the government to fulfill, okay, its short-term financial requirements. Okay. Next one is implementation of the monetary policy. So here in students, the monetary policy which is implemented by the central bank, it aims at managing the quantity of money in order to meet the requirements of various sectors. Next one is economizes the use of cash. Okay, so here in students, since money market, it deals with various financial instruments that are close substitutes of money. Okay, they are not actual money, but they are close substitutes of money. Thus, this economizes the use of cash. Next one is growth of commerce, industry and trade. So money market student, it facilitates discounting bills of exchange to local as well as the international traders who are in need of funds. So hence it facilitates, it meets the working capital requirement and it facilitates growth, expansion, and it expands the growth industry and trade of our country. So role of money market students, short-term requirements of borrowers, liquidity management, portfolio management, equilibrating mechanism, financial requirement of the government, implementation of the monetary policy, economizes the use of cash, and the last one is growth of commerce, industry and trade. Let's move on to the next answer, students, and that talks about the problem of money market. Okay, there are certain problems that are involved into the money market. Let's have a quick look on that. First one is dual structure of the money market. Okay, so here in students, both the organized and the unorganized sector are present in the money market. So here, because of this, there is lack of transparency, too many problems, lack of coordination can come in. So that is why, because of the dual structure, because of the organized and unorganized sector coming together, it can be a problem in the money market. Next one, students, is lack of uniformity in the rate of interest. Okay, so money market, it gives various entities, it gives interest to various banks, but the interest rate, students, are different. Okay, it depends on the investment that they take. Next one is shortage of funds. Here in students, this money market, it faces a lot of shortage of funds because of inadequate savings that they have. Next one is seasonal fluctuation. Okay, so the demand for funds also varies as per the seasons. Okay, so finance, sometimes in a particular season they require more finance, so that time, because of seasonal fluctuation, there is a problem in the money market. Next one is lack of financial inclusion. So your students, this banking, it facilitates, the banking facilities that are there into the country. There are, many problems that are coming in. The weaker sections, the lower groups are facing a lot of difficulties. Okay, so this shows, lack of financial inclusion in the money market. Last one is delay in technological upgradation. So here in students, because of the advanced technology, okay, as you all know that advanced technology is the most important requirement for the smooth functioning of financial market. But there are certain delays in the upgradation of technologies which hampers the working of the money market. Okay, so with this, students, we've completed the problems of the Indian money market. That is dual structure of the money market, lack of uniformity, shortage of funds, seasonal fluctuation, lack of financial inclusion, and in last we have delays in technological upgradation. Okay, let's move on to the next slide, students, and the topic is capital market in India. Okay, so what is capital market? Capital market is a market for long-term funds, okay, both equity and debt, raised within and outside the country. Okay, so it is also an important constituent of the financial system, students. So development of an effective capital market is always necessary for promoting more investment as well as achieving economic growth. So what is capital market? It is a market for trading long-term funds. Money market was trading short-term funds, and capital market is used for trading long-term funds. Okay, let us now study the role of capital market in India. Okay, so first role is it mobilizes long-term saving. Okay, so here, students, there is always an increase in demand for investment by the industrial sectors. So herein, the availability of financial resources, it becomes insufficient, okay, to meet the growing demand. So what happens? This capital market, it helps to mobilize long-term saving from various sections of the population. Next one is provides equity capital. Okay, so capital market, students, it provides equity capital to the entrepreneurs, which in turn, they can purchase the assets as well as the funds required. Next one is operational efficiency. So capital market, students, helps in achieving operational efficiency also. Okay? Like they can get, lowering the settlement timings can be done, simplifying the transaction activities can be done in the capital market. Next one is quick valuation. Okay, so capital market, students, helps to determine a quick value to both the equity and the borrowed capital. Last one is integration. So capital market, students, it leads to integration, okay, of real sector, of the real and the financial sectors, okay, of equity and debt instruments, of domestic and external funds. So it leads to integration of all the funds. So these were the role of capital market in India. Let's have a quick recap. Mobilizes long-term saving. Next you have provides equity capital. Next you have the operational efficiency. Then you have quick valuation, and in the end you have integration. Let's move on to the next slide, students, and that talks about problems of capital market. Okay, so first you have financial scams. So students, increasing number of frauds, okay, they have resulted, a loss in the capital market. Second one is insider trading and price manipulation. So here in students, what is insider trading? It means buying and selling of securities without, having public information, without having the access to the public. Okay, so herein, because of this, price manipulation can take place. Okay, price rigging also can take place. So that becomes a problem in the capital market. Third one is inadequate debt instruments. So debt instruments, okay, like debentures, bonds, okay, there is not much trading in debt instruments. So that is why there is a problem of inadequate debt instruments in capital market. Next, you have decline in the volume of trade. Okay, so here in students, the regional stock exchanges, they have witnessed a decline in the volume of trade because always the traders are now interested to list their shares only in the listed companies. Last one is lack of informational efficiency. So, students, a market, we can say it is very efficient when you get all the information in the market properly. Okay. Now, the stock market in India, here we can say it lacks informational efficiency as compared to the advanced countries. Okay, because all the information, we only get information about the current prices. So we can say there is a lack of informational efficiency in the capital market. Okay, so the problems of capital market, students, let's have a quick look on this. Financial scams, insider trading and price manipulation, inadequate debt instruments, decline in the volume of trade, and lack of informational efficiency. Okay, so with this, students, we've completed the chapter. Thank you.